Hello, I'm Peter Towers, Managing Director at Towers Business Development. Welcome to this update for SME business operators improving your business. Today, I want to talk to you about planning funding for your business. Now, obviously, your business might be a sole trader or a partnership, in which case, primarily, you can only borrow money unless you invite someone new to join your partnership, of course. And if you're borrowing money, you normally need to have a real estate asset that can be secured by the lender, normally a bank. The bank will require the people within the business, the sole trader or the partners, to sign a personal guarantee. And normally the business will have to agree to make monthly repayments of principal and interest. Unfortunately, a sole trader or a partnership cannot raise share capital from the public like a company can. So if you're thinking about growing your business, scaling up, and you're currently only a sole trader or a partnership, perhaps you should be thinking about incorporating your business as a company so you can start getting the right records, the right structures in place to be able to utilize that corporate structure to be able to raise capital. There are three main opportunities for companies to be able to raise capital. Section 708 of the Corporations Act has been with us for 35 years, and it has enabled thousands of companies to raise some capital without having to issue a prospectus. Section 708 allows a private company to be able to raise up to $2 million in a 12-month period from a maximum of 20 investors. However, there can be no advertising or marketing, so it's basically capital raising that's conducted with friends and close colleagues, workmates, football team members, golfing partners, etc. You also need to be aware that a private company can only have a maximum of 50 shareholders. So that can restrain the capital raising activities going on and on. There's really no hard and fast documentation required, but I think it's prudent if you're thinking about trying to raise capital to make sure that a properly prepared business plan is available together with predictive accounting reports looking at budgets, cash flow forecasts, and projected balance sheets. Let's now turn to one of the two new ways that were introduced about 4 years ago to enable private companies to be able to raise capital. Early stage innovation companies was introduced to try to encourage investors to seriously look at investing at young Australian businesses that had developed new products, processes, services, marketing, or management methodologies. This legislation to create this status of a company, early stage innovation company, was done by making amendments to the Income Tax Act. And you might say, why would they amend the Income Tax Act? Well, it's pretty straightforward, really. The real benefit from this legislation for a company's point of view is that there are some attractions built in through income tax concessions to attract investors to look at these types of companies that qualify for this status. Investors can obtain a 20% tax rebate based on the amount of their investment in the new company, up to a maximum of $200,000 for a sophisticated investor and $10,000 for a retail investor. Plus, they don't have to pay capital gains tax on the shares if they hold those shares for longer than 12 months and less than 10 years. And at the end of 10 years, the company can be revalued and the original shareholders' investment is recalculated then on that revalued amount. So they have an adjusted cost price for capital gains tax purposes ultimately. The company itself is young. The prime objective is for companies under 3 years of age, but there are some rules which would enable someone up to 6 years of age to qualify. The company needs to have income of less than $200,000 in the previous 12 months, not including any grant money received from the Accelerating Commercialisation Grant, and its expenditure must be under $1 million in the previous 12 months. Plus, it also has to pass one of 2 additional tests. The principles test, which is 5 questions, and the company has to give a detailed answer to each of those questions, basically looking at its prospects in the marketplace. And there's also the gateway tests. There's 8 questions, and the company earns points that can range from 75 down to 25 points, depending on the question. And they have to accumulate at least 100 points to be accepted as having qualified as an early stage innovation company. Now, those companies are definitely going to require some assistance to go through this process to get them ready for the due diligence phase and the submissions that have to be made to the Australian Taxation Office. The last company that I want to briefly talk to you about is Crowdsource Funding Equity Raising. This was the running mate of early stage innovation companies when the legislation was introduced into Parliament. This status is available for a company with a turnover under $25 million and a gross value of assets under $25 million. So the company can raise up to $5 million in a 12-month period. There is a process because the government created a new group of advisors called Crowdsource Funding Intermediaries, and these organisations are empowered with checking the documentation, primarily the crowdsource funding offer document, which the company has to produce. The company then needs to go through the process. In all these cases, the company is going to need a detailed business plan or strategic plan, predictive accounting, budgets, cash flow forecasts, projected balance sheets, corporate charts, and a leadership team that's really got a vision and a plan for what they're going to try to achieve. If you would like to talk to me about any of these capital raising opportunities for your business, whether it's a sole trader partnership or a company, I have had considerable experience in this area, so I'm happy to talk to you about it. Please send me an email, peter@towersbusiness.com.au, or telephone me 1-800-232-088, and I'll be happy to talk to you. Have a great day and stay safe if you're in one of those lockdown areas, please. Goodbye.